Hello and welcome back to the Note. We've had a relatively calm day on world markets today. The S&P is now within less than 1% of its all-time high from May. Gold has had another horrible day. It's down more than 6% from its recent high, so it doesn't look as though gold has turned. What I'd like to do today is take a look at what the consensus is thinking, because the money is to be made by betting against the consensus. We have some very interesting surveys from Barclays, and I'd like to start with this one where big institutional investors were asked what they thought the market's biggest risk over the next year was. You can see that yellow bar there is weak China. Plainly, in the summer, that was by far the greatest concern. It still is, but note that it is declining. Also, fascinatingly, take a look at that blue bar, which is the concern about Fed policy withdrawal, i.e. the beginning of normalized interest rates from the Fed. Now, plainly, we are closer than ever before to raising rates, and yet, as you can see, those blue lines have almost disappeared. People have convinced themselves at this point that the Fed will probably raise rates in December and that it won't really matter. The implication for this is that a poor China is actually in the price. Unless China seriously crashes at this point, it's not necessarily going to be a problem for world risk markets. But when it comes to the Fed, the risk of a very unpleasant surprise after the Fed moves, bond yields react, is quite significant, because investors have convinced themselves that it's not going to matter. Finally, also notice that rising purple line, that people are worried about developed market growth. Now, in terms of what the greatest risk is, plainly it's deflation rather than inflation. That helps to explain why gold is doing badly. Again, on the principle that you should take a look at the consensus and be prepared to bet against this. The big risk at the moment is resurgent inflation. People are not positioned for that. Finally, if we take a look at emerging markets, you can see a slightly worrying picture here. Obviously, emerging markets are out of favour at the moment. The one emerging market that is in favour in a remarkably big way is India. People are absolutely convinced that India seems to be the best bet among emerging markets at the moment. That's a shame, because it also trades at by far the highest multiple among emerging markets. If you want to avoid the risk in emerging markets, you will have to pay for it. Again, this looks like a consensus trade that it might be worth betting against. So that is where the consensus has us at this moment, that China's growth isn't going to look so great, but we can deal with it, and that the Fed is going to raise rates and we can deal with it. Plainly, the risk is if either of those things prove to be wrong.